Hello and welcome back to the Winnipeg Market Watch podcast. I am Keenan, joined once again by Denzel, and today we are going to be discussing the September data. It is currently October the 18th, 2025. We've had a lot of crazy stuff go on in the last little while since the last episode. First thing, Denzel, how are you this morning?
Feeling pretty good and getting over a little bit of like a sore throat and stuff. I think obviously with the weather changing, a lot of people are getting sick, with
Yeah,
myself included. But yeah, I'm feeling pretty good.
excellent. Well, let's jump right into it. So this past month in September, the benchmark price was actually down. We went from $441,700 to $438,400. That leaves us down 0.75% month over month, but we're still up 5.66% year to date. For those of you that are keeping track, we're about 2.1% above the last all time high in May of 2022. Um, Kind of just broadly, September was a pretty busy month, at least for me. Denzel, without thinking too hard about the numbers, anecdotally, how was your September?
September was definitely a busy month for me. It was nice to be busy because my business in terms of acquisitions was a little bit slower in August. Actually, disappointingly slow compared to like the rest of the year. But I think it's good just to reset and just enjoy life a little bit and make it not all about real estate and business. So like I guess God was giving me a opportunity to just smell the roses, right?
Mm-hmm.
But September was really busy. I felt like every week there was something going on. We had a property that we just sold actually this week that was being worked on during September, and a lot of new buys actually. With There's a lot of chaotic uh, purchases in the month of September, but nonetheless, we're dealing with them now, and yeah, so September was busier than most Septembers that I've had in the past, but you know this, Keenan, the deals just kind of come in waves, right?
They do. They
Yeah.
for sure do. And I can think back during the month, there were obviously a lot of property that you were involved in that I was also involved in, but then we also had a lot of
Yeah.
stuff that didn't have anything to do with one another. And I can
Yeah.
say I'm aware of a lot of pretty exciting properties that you got involved in one way or the other, including a pretty significant project in West Winnipeg in Crestview. And
Yeah.
that one is going to be a pretty exciting one. But I actually I wanted to take a second before we dove into the numbers and just get started right away. Um, this is a question I've been asked a lot by investors at this point in time. They say, Keenan, if I pick up a property or if I sign a contract to purchase in October 2025 right now, when should I be taking possession to have the best outcome in 2026? And I know what my answer has been, but I'm actually curious, how have you been navigating that same problem in your acquisition business?
I think anything that's being planned on being bought right now, taking possession from anywhere from January to I would even say March are probably going to be most ideal possession dates. The reason why I say that is because it allows you to finish all of the interior work, in those months, and then if there is exterior work to do, um, hopefully you are catching some better weather in the month of March or April to take care of that. Now, that goes without saying that people who are looking for houses to buy in terms of the end product, if you had a possession date, say in middle of November or early December, and you happen to be finished in February and you weren't able to do the outside because of the weather, um, you might get a little bit more leeway in what you could or what would be considered acceptable to a buyer buying in the winter, right? Because I've sold houses where, if it was a lot nicer outside, I'd have to do all of the landscaping, and just some certain maintenance things around the perimeter of a property. But having to skip that in the winter because it's just too cold to do anything, right? Or, you can't do a fence in the middle of January, right? So you just list it, and however it goes is however it goes, and people understand that, and it just becomes now a summer project for a homeowner. Just don't leave them with something that's like outrageously difficult, right? Like if it's like
Right.
foundation repair, get that done, obviously. But I'm talking, okay, so maybe the grade isn't perfect. Well, it's going to be really hard for you to solve that like in February, right? And
Yes.
so a homeowner might see that and be like, okay, I just got to make sure I'm on top of this when the snow starts to melt.
True. And that's more or less the same answer that I've kind of been giving to people on that. Is first of all, it depends on the situation and it depends on the property. But I have been an advocate of people taking possession in later November and December, with the idea being that they can work on it through those really cold months and still list it in that early part of spring, sorry, and strike while the iron is hot. I know we both have pretty similar opinions on where the market tends to go in Winnipeg, and I really like selling into February and March. And some people would say that's too soon. You're better off waiting till April or May. But we've talked about this a lot on the podcast. It's the liquidity that matters the most, and selling into lower supply, higher absorption markets is just as good as selling into a market that's priced higher but has less activity. And that,
Yeah, I'd even say, sorry, Keenan.
not at all.
I'd even go as far as saying January wouldn't be a bad time to sell too, like middle of January, right? Maybe a week or two right after New Year's.
I agree. And
Yeah.
I've spent the last, well, especially 3 weeks here since our last episode, talking pretty extensively with people about making 2026 plans. And it's just about at the time of year where the majority of the conversations that I have with investors is actually what's next year going to look like, not so much what's happening right now, although that's still obviously a very popular topic. And I promise folks, we will get into what's happening right now. But I have kind of structured based on the type of property that is to be sold, where it is, what the current situation is in those neighborhoods, and what the popularity of the product is. I've sort of made a schedule with most of the people that I've been working with as to when we should actually be aiming to hit the market. Obviously, with some variance for delays, permits, or other potential issues. But I couldn't agree more. I love early January for listing because you are probably the only one that's going to be in your area at that time that hasn't already been on the market for the majority of November, December. You know what I mean?
Mhm.
Speaking of absorption, we have a lot of interesting data from September. And while pricing did fall in terms of both average sale price and in terms of the benchmark price, one statistic that really stood out to me in particular was we still had a very, very strong level of sales this past month. In fact, it's stronger than we've had in any September since 2021. And then that being said, too, we're only 10% below the 2021 level, which was probably the highest September ever in terms of the amount of properties being transacted. Now, we've talked so much about absorption and so much about the liquidity of different property types and how important that is as an investor. Denzel, I've heard from a lot of people saying that they thought September was not a great month to sell, but my lived experience and actually the data from an investor's perspective kind of suggested otherwise. What do you think about the level of sales there? And as somebody that's holding a lot of property to be sold later, what do you think of the price losses in conjunction with the high level of sales?
Well, I think that first of all, a lot of people were busy in September going back to school, right? So a lot of those retail buyers who are hoping to um, get into a property before the new year was coming, like the new school year was coming up, or whatever the reason might have been, already bought. You know, those people that might have been actually waiting since 2024 to get into a property
Mm-hmm.
have already bought, right? And so it's kind of like that, right? Like you'll have people that from the previous year, you know, really waited out to find the right property, and that cycle of a buyer could take up to a year, right? So someone who started looking in September 2024 might not find something until about like July of 2025. right? Just because it's just not the right house or the timing isn't right. But I think one of the reasons why we're seeing lower pricing but higher sales volume is perhaps the appetite of the buyers is a little bit different, because a lot of the things that you had sold actually uh, were investment property,
They
right?
were. That is also true. Yeah.
So that has something to say about who are the buyers out there looking for property to buy. Investors, people looking for a deal. So, most people are looking for something that's less than retail, right?
Of course. Value
Most
hunters.
times.
Yeah.
Value hunters, exactly. So, they start to come out of the woodwork in September, because historically, like September, the fall market, it's when it happens. I'm talking to a realtor yesterday, and I'm inside of a house in North Kildonan, and she's like, yeah, I'll let you know when I find the next one. Right now is usually the time these things pop up, right? And I maybe had like a handful of exchanges with this particular realtor, and she says that to me, and I know that she's been in the business for like 10 plus years. So for her to say that kind of just, confirms that it is true that you're going to be able to find deals at this time of the year. And so if you see the sales, um, if we see an increase in volume, it could also mean that, there's a lot more investors that are actually trying to get their feet wet in real estate. And that's why
And
the prices are low too.
I'd absolutely agree with that. This is actually a nice foray into the next topic, which is listing as is, or the buy and list method of investing. And one thing that I think we've actually noted in the last episode was the appetite for property, specifically with the intention of making profit, I find hasn't been this high since 2021. However, the appetite for totally finished products and the appetite to push an ARV to a new level or to set a record sale in any given neighborhood, I've also found isn't as high as it's even been this year, never mind the last few years. Keep in mind, too, we are still legitimately at one of the highest pricing levels we've seen in this city at a very, very, very long time. But a lot of
Yeah.
people there are looking to purchase with the intention to make profit. Now, I don't know if there's a limit to that. Like, I can't say for sure if there's a point at which, okay, now the property just is too much. We're not willing to take on that much work. But with everything that I put on the market that was more investor focused, or at least the marketing was packaged in a way that it was intended to go to an investor and priced in such a manner that it would have been possible to make money off of the property, that is exactly what we saw. A huge appetite of people coming in, often with cash, by the way, to purchase these properties. And the margins are just getting smaller and smaller and smaller. So, Denzel, as somebody that comes across a relatively large amount of distressed property, talk to me about your thoughts on the close and list method of investing.
Oh yeah, I could talk about this for a long time. Uh, all right. So closing and listing, I believe, depending on what you buy at and what you're buying, can be extremely lucrative. I was talking to another pretty reputable flipper actually just yesterday, because we had properties that were listed kind of at the same time this week, or sorry, last week. I don't think he got an offer on his offer date, but we were going about back and forth, and I just said, you know what? Why don't we just buy these things and just list them? We'll probably make a lot less, and it won't be that cool to talk about or to market, but who cares? Like, ultimately, at the end of the day, it's about how profitable you could be, right? Um, and it's really hard to go out of business when you're always making a profit,
Of course.
right? So I think that there's a time and place to be uh, closing and listing. It's very situation based, because a lot of I've had instances, and this is more just my moral compass working here, where I would buy a property from someone, and it's a very sentimental uh, time for this person to be letting go of that property. It might have been dad's house, it might have been mom's house, might have been their childhood home, and it's just very intense. Um, emotions during some of these. I hate to say the word transaction, but let's just use it because I can't think of another word.
Oh,
But
and it legitimately is called
it is a
a
transaction, right? So to buy grandma's house for a discount for one reason or another, and then to immediately turn around and sell grandma's house after sitting down with someone for an hour just feels wrong sometimes. And that's just me. And I'm like, well, we should at least probably paint it and put new flooring in for what it's worth. Right.
and that
Um,
makes sense. There is definitely a social time where it's inappropriate or would be in
yeah,
bad.
like, or, an agent gets me, there's a pocket listing and whatever with situation based, right? They need
Mhm.
out fast, list it and sell it. It's like, damn, it first of all could make the realtor look like they might have not have done the best job for that person, right?
Yep.
But at the same time, it's more so to solve problems, right? Getting a little bit off topic here, but point being, I think that there's a time and place for buying and listing. I do think that from my experience of observing some of the people around me use this strategy, I find that I've found that it's actually more profitable than flipping. There's less risk, right? Because if you're buying it right, uh, the likelihood of you losing money is a lot lower. And the minute that you start to invest in a deal, whether that's, a large renovation or just a minor cosmetic renovation, your risks start to increase, right? Because now you can't control what happens in the market. You can't control when you finish the project. You can't control, there's a lot of things that you don't have control over, right?
Right.
And so there's just, I feel a little bit more certainty selling as is because it is what it is. The house is literally what it is, and it's not going to change any more than that, right? So you
Right.
leave it with the buyers on the market to come up with whatever it is they think the value is. I'm going to go back to a house that we just sold last week, which by the way, we were only like $5,000 away from the highest sale in the area. We bought that house for like 450,000. And after everything was said and done, we were into it for 490 after all the fees. And could we have just gone to market in April or May and went 499 and maybe got 525, 530? Maybe, but it's hard to say, right? So I don't know. It time and place, I think, and I do think it's a strategy that most investors should try to implement if they're getting a lot of opportunity.
I would agree with that last part, especially where this is really going to depend on what kind of deal flow and what kind of volume you're already doing. I've seen it too many times in my business where new investors or people that are interested in flipping more or doing more big projects as opposed to quicker ones bite off more than they can chew and they stall. And in those kind of situations, it's really hard to say no to a deal. I get that, believe me, especially if there's times where it's uncertain when the next one is going to arrive. So I've been an advocate situationally. Again, I don't want to create social problems or come across as the guy that has just absolutely, and there's Denzel's daughter on screen for those of you that are watching. I don't want to be the guy to create social problems or to do anything to put anybody in a bad situation, even if it is just hurt feelings about doing such a buy and list strategy. It's definitely one of those things where you can't do it every time, but there should be a consideration now and then where it might be the best way to get the most out of whatever it is you purchase. Like, for example, if you buy a property on MLS, it's going to be really, really hard to go and put it back on market and make money because why didn't
Yeah.
it make money the first time? But in these private deals or particularly distressed situations where somebody has to sell and they may not have a choice, it can be very lucrative to do that, especially if there's an urgent timeline that can't be met. And as a realtor, believe me, I deal with sellers that basically before the contracts are even signed, they're already asking me when's the money coming. And I can't even really answer some of these times. Like let's say it's an estate, or let's say I'm not totally sure what the exact payout schedule is going to look like because I don't have title. Not for the Securities Commission. I always pull title every single house, no matter what, every time. But let's just say I didn't look at it. I might not be able to answer that super accurately. And that's pretty front of mind. So if I've got a seller who is in trouble and they are freaking out, let's just say they can't list. And that happens a lot too. And believe me, those deals are out there. For those of you watching going, oh, where do you even find those? Don't worry about it. They exist. they find me. You know what I mean?
Yeah.
That's getting a little philosophical. But I don't want you guys out there listening to feel like we're ruthlessly hunting people down to purchase a property for dramatically less than it's worth and raking in tens or hundreds of thousands of dollars to just simply put it on the market when and somebody got completely taken advantage of. Usually there is more to the story, and what was being bought wasn't an undervalued asset. It was actually time. And that's more of what this is about than anything. But very adorable. Nonetheless, for you guys at home, I think that it is almost always better to complete a flip or to at least improve the property to make it habitable and provide the lift. You will probably make more dollars and cents, but this is very simply risk management. And you guys are all, by the act of purchasing property with the intention of selling for a profit at some point, you are actively risk managing. And you need to keep in mind that that is a tool in your arsenal that I've seen not enough people use in such a market where there's a very strong appetite for people who want projects now. Did I put that succinctly enough, Denzel? Anything to add? Maybe his mic is muted. He's off with his daughter.
Sorry, Keenan. Yeah, my mic was muted. But yeah, I think especially for those who are operating and flipping houses actively, risk management is something that cannot be overlooked. I think that when I first started out, it was something that I kind of thought didn't exist because of the time that I entered the market. But it's something that we all need to think about. If we're doing, for example, 4 or 5 deals at a time, and one comes on your plate and it's clearly a lot bigger of a job than you're expecting to take on or that you can actually take on, before you make that decision to actually close on that property, there's a few things that I'm just going to give some advice for people who are doing things at volume or not. Just keep this in mind. Think about what you have on the go. Be realistic with when that project's actually going to be done. And think about at what time that project's going to be done. And when I say time, I mean like time in the year. I got caught in some deals that went sideways because of me being too optimistic of the market and not paying attention to what was happening around me. And 2, just simply biting more off than I could chew. If you already have 2, 3 pretty big renovation projects on the go, you don't need another one. Finish what you started and then find another, because it's just, I promise you'll regret it when you're in the thick of things and you're trying to rush and you have this really terrible product because you didn't really spend the time that you should have on that. So that's what I have to say about it.
Makes perfect sense to me. So for those of you out there, let's break down a little bit more of the demand side of the equation here as we dig into the data further. We just had our first rate cut in quite some time, in many months, actually, this past September. On the 17th, the Bank of Canada cut rates by 0.25%. Most are expecting that this next meeting on October 29th, which is now 11 days away, will likely bring yet another similar cut. And there are still people saying that in December, there will be a third cut, which would likely bring the policy rate back to 2%, which, as many of you or most of you are aware, is what the Bank of Canada actually considers their neutral interest rate. That 2% Bank of Canada benchmark is what they've been aiming for quite a long time. We all know what happens when rates get low and we move into a spring market. Keep in mind, in 2023, for those of you that were here at the time, you'll remember this pretty accurately, but we had 6.5% mortgages for fixed rates in January and February, and we still saw an insane 15% increase from the December low to the May high in that year. Denzel, when you see sudden rate cuts like this again at this late stage of the year in Q4, how does that make you feel about the spring, especially those early months, the January, February, March that we talk so much about?
I think that the same goes as interest rates go down, prices go up. And as interest rates go up, prices go down. Although I do think this is a different time than COVID. I'm allowed to say that, right?
That this is a different time.
I feel like some people. No, I mean COVID, the word COVID. But anyway,
like, we're not trying to go viral on this, so like, yeah, I guess we're allowed to say what you want. You can say any of like the bad words. You don't need to use like the YouTube speak, like the meme talk to censor, words that the algorithm won't like. The algorithm already doesn't like this podcast, so
yeah,
all good.
Okay, so I think the mechanics of why the Bank of Canada is cutting the rates is a lot different in comparison to what was happening during COVID. Okay. And I also do believe that during that time when people were cooped up in their houses, the only thing that you could look at, first of all, everyone was on their phones. So like real estate marketing was perfect during that time. Real estate investing, buying real estate, building generational wealth, that was all over social media during that time. Now, with the rates going in the direction that they're going, are we going to see, insanely high prices over the next couple of years? I can't say, but I do think that we're poised for another strong spring. And I'm just going to make a prediction now that we will probably see a new all-time high next spring. Because let's not forget that the cost of money, as it continues to go down, is going to make that house that people are buying today more affordable, right? And Winnipeg already has a median income. I forget. I don't even know what the number. Do you know what the number is?
It's something like the per person median has got to be around 60,000 Canadian in Winnipeg.
Yeah, like there's a lot of people in my circle that are like looking to buy houses still, and they're like well established in their careers. Their combined income is like 150 grand, 130 grand. And with that, as long as they don't have any debt, they can afford 500, 525, 550. And like it's happening. Like I was just at a friend's house the other day. They bought a house, and I think their all-in cost for that thing is in Ridgewood West. It was like 750 grand. You just bought that. And yeah, I just feel like it's we might not see a crazy hockey stick up in prices next spring, but I think we are going to see a new all-time high. I can't see it going flat. I can't see it going down, but I mean, obviously, who knows? But that's what I'm thinking with the way the rates are going.
Fair enough, and I largely hold the same opinions. I've been telling people for the last few months that it's not a bad idea to load the bases for spring of next year at a time like this. So if there is a deal to be bought, or if you have the opportunity to close on something and you have the funds, the manpower, and the timeline to be able to carry such a project through to completion, so it's done in one of those early spring Q1 or very early Q2 type months, my advice is probably jump on it. You are likely to have a good time based on the market. Now, in the more immediate term, it's going to be really interesting to see where this next dot appears on the chart. Obviously, we're down 0.75% on the benchmark basis in this last month, and October so far, from what I've lived as an experience, has not been as busy as September for a lot of reasons. Now, that is also very seasonally normal. However, pricing seems to be pretty stable. I'm not seeing stuff go totally nosediving out there, although other realtors have mentioned to me that they have. So on the 29th, we're going to get this rate cut, and it won't really take much effect on the October data, but it might on the November. And then it might once again as well on the December. And so we're going to have probably a lot to discuss as to where the bottom is going to be for this year, because I've always been of the opinion that it's just as important to look at the yearly lows as it is to look at the yearly highs when you look at a chart. The highs are more exciting, more flashy and fun to talk about, but I think the real story is how bad did it get? You know what I mean?
Right.
And so for this year, like, are we going to return to where we were? Are we going to round trip this whole year to December 2024 and end up at 415? I seriously don't think so. My expectation is we're still going to be above the May 2022 high of 421 by the end of 2025. We're probably not going to be far off of where we are now, but we've absolutely had big moves in this last quarter in the past. So I guess kind of moving on to concluding thoughts, my advice is spend the next, let's call it 8-10 weeks left in 2025. Be a buyer, be a heavy buyer, especially if you've got the funds and the manpower. But kind of to close off the episode, Denzel, if you were to be listing property right now, like completed flip projects or buy and list as is deals, how would you go about pricing and strategically doing those projects on the market in, say, mid-November to December? Or would you just wait till January? Still muted.
1 second here. Can you hear me?
Yep. Oh, try again.
How about now?
Yeah, we're good. We're good.
So what I would say is, if you're doing the buy and list strategy from now until January, that was the question, right?
Yeah. Well, basically, not even just buy and list. Like, if you have property to list before the end of the year, let's say you've got a flip that's going to be ready in November or December. What are your thoughts on marketing that property in the late stages of Q4? And are you of the mind that at a certain date, you should just hold the project through to January? And if so, when would you just wait?
Right. I'll use the example that we bought in Crestview as where my thoughts are on that. So we have possession in November the 1st, which is just in a few weeks here. And that house needs exterior work. There's a pool that needs to be demoed. There's some landscaping around the perimeter that needs to be done. There's things to do on the outside. It's going to be too cold to do that middle of November. And so we're forced pretty much to either find solutions that we can do in the winter, like, install siding instead of having to paint the house.
Yeah.
Which is less desirable, by the way, because it's just more expensive, plain and simple, to do that. I would probably say for something like that, because we're going to be taking out private money, a combination of both private money and cash, that we're probably not going to want to wait all the way until January or February to start the project, just so that we could complete it in April. I've spoke to my partner about that one, and we're just accepting that we might not get the absolute tippy top or in the range of that, and just lowering our expectations of what the exit is, just so that we can keep the cash flow going. Because remember, it's cash flow is really important in our business, because I can almost guarantee you that there's going to be opportunities in January or in February that if we were to just say, you know what, we're just going to wait until it gets a little bit better out so that we can possibly make that 5 to 10 grand on this one deal, and just say, you know what, let's just take what we can right now and then move on to the next opportunity, and then make decisions in that little window there. Now, when would I actually carry a property through the winter?
Mm-hmm.
I use this strategy with the house that we actually just sold. I knew that I was tied up with a few other things
during the month of May and June that it was going to be difficult for me to spend the time and effort to get this property to where it got to now. And I skipped the summer in hopes that we were going to get a better price, you know, in get a better price in the fall.
Mhm.
Now, same thing. If we were into this property in Crestview for cash and there was no holding costs, I would strongly consider, okay, you know what? We're gonna actually finish everything that we possibly can, and then we're gonna wait until February or March to try to tackle the exterior because that way, Savea just wants to be a featured guest on the podcast. Sorry.
It's okay. Yeah.
Um, and so and so yeah, I would definitely look to wait if that was the case. If we had own this property in cash. So for the people listening out there, just take a look at how you're financing these projects. If you can wait, and maybe you're not someone who's doing a ton of volume and cash flow isn't exactly your highest priority in your business, your real estate business, then yeah, look to wait a little bit longer. You know, if you're someone who maybe only does like 3, 4 deals a year, why not wait until the best time to sell for your property?
Makes perfect sense. And that's something that I'm happy to advise each of you guys individually. If you are in that conundrum, please let me know, and I'll talk about your unique situation and what the benefits are to each. So I see Denzel and Savea are over there laughing, and looks like she's trying to get on screen really bad. So we're going to leave this episode kind of on that note. Thanks again for tuning in, everybody. Please, once again, feel free to reach out to Denzel or I if you have any questions. And as always, I appreciate you listening. Looking forward to seeing you guys in the next one. See y'all later.